much. Thank you, Diane, for the fantastic moderation, and thank you for to all our panelists. So I will now stop the recording. I will put it in pause, and we will start again in 10 minutes. Thank you so much. So welcome again. So we are now ready for our second panel. As we are recording the session, I need to reiterate the brief note on GDPR for our panelists. So your participation in today's sessions entails your implicit consent to the publication of the video and audio recording, as well as extras of it on websites, online platforms, and social networks used by the research project or by third parties with whom we have established a partnership. So I'm now delighted to give the floor to Professor Andrew Francis, Professor of Law, Deputy Pro-Vice Chancellor, and Head of the Manchester Law School. Andrew will be the chair of our second panel, The Causes, which, building upon the themes and elements that emerged during the discussion of the first panel, will explore the relevant legal, regulatory, and moral dimensions of professional involvement in such tax crimes and related questionable practices. Andrew, the floor is yours.
Thank you, Costantino, and thank you, colleagues. And I should say welcome virtually, at least, to this part of the panel and Manchester Law School and indeed Manchester Metropolitan University. I very much hope that in days and months to come, we'll be able to welcome many of you to what is today and always a very sunny and warm and welcoming city. We're a law school that has very deep connections to professional practice through our educational programs, the teaching that we offer through our external engagement and through our research. So absolutely delighted to be able to host this discussion and to welcome Costantino and indeed the wider research project as part of this conversation. So Costantino has said our focus is to explore some of the causes in a sense of the professionals who were involved in potentially enabling some of these issues, and really delighted to be joined by three incredibly well qualified, incredibly well positioned scholars who are going to be able to sort of contribute and frame the discussion and the research question for us. Our first colleague who's joining us, first panelist, is Dr. Aleksandra Jordanoska. She's a lecturer in corporate law at King's College in London. Aleksandra's research very broadly engages with different modes of governance in a range of financial markets, also looks at the regulation of financial technologies and frames this within broader regulation theory. She has a particular specialism in looking at regulatory enforcement in the financial services industry. So really thrilled that Aleksandra can join us this afternoon. We're also joined by Professor Daniel Ostas from Vacation. So particularly delighted, Daniel, that you could join us today. Daniel is a professor of business ethics and professor of legal studies at the University of Oklahoma. His research addresses the economics of marketplace ethics and the ethics of corporate legal strategy. Incredibly well published author with over 70 scholarly works, including 3 books, and has received several dozen international research awards. His research focuses particularly on corporate taxation and the law and ethics of lobbying. We're also joined, I'm delighted, by Professor Kelly Richmond Pope, professor in accountancy at DePaul University. Professor Pope focuses on forensic accounting and also has broadened her practice into filmmaking as well. The particular focus of her work addresses issues around anti-money laundering, insurance fraud investigations, and fraud risk management. And all of our participants today are going to enable us to explore some of the questions that have been framed in the foundational discussion in the first panel. So in terms of format, this afternoon, I'm going to invite each of our esteemed panelists to make some preliminary remarks and observations about the issues that we'll explore. I'll then invite, as we did in the first question, invite panelists to reflect upon some of the key research questions of the project. And then, as Costantino said, if colleagues can continue to post their comments, questions and observations in the chat bar, I'll take a look at those and try and draw those out to frame further questions as well. Okay, so we're going to kick off with 5 minutes each from each of our panelists, and simply take us in the order that I can see people in front of me. So, Aleksandra, do you want to kick us off with 5 minutes of reflections on the issues and the challenges that you see in the area?
Thank you, Andrew. And again, hello, everyone. And thank you for the very kind introduction, Andrew. So in preparing for my reflections for this session, I was thinking about some of the points that are meant to be framing items for the discussion today. And I was thinking primarily about the first point in the outline that you sent to us, Andrew, regarding the proximate and perhaps remote causes of fiscal corruption and the role of facilitators within this. As the discussion has already picked up earlier, facilitators are key intermediaries in the instigation of tax evasion or even tax avoidance. This was raised very astutely in one of the comments by the attendees, that we need to make that differentiation. And indeed, very good facilitators, very good advisors are going to ensure that the particular advice remains in the realm of tax avoidance rather than ending up in tax evasion. So therefore, responsibilizing facilitators is a key question in the area of preventing tax evasion, as has of course already come across from the discussion. In thinking about particular points, like drawing from different literature, so the criminological scholarship and regulatory scholarship, in thinking about some of the causes that perhaps contribute to a particular culture or particular ethics of different professions that are involved in facilitating tax evasion. And here I'm thinking of financial institutions, solicitors or lawyers, tax advisors, accountants, and even company advisors, because we know that one particular instrument that is used for tax evasion are corporate vehicles, shell companies, where it is very difficult to establish beneficial ownership. So now there is also another profession that specializes in establishing different types of corporate structures. So when we think about facilitators, there is a range of different roles that have a stake in the tax evasion project, if I can call it that. So one of the issues that has come across also in my research with white-collar crime offenders is the particular, I suppose, framing that exists regarding the harm that is perpetuated or committed when advising on tax evasion models. And there is a specific concept in the criminological literature called techniques of neutralization, which means that offenders, particularly tax advisors, let's say, or other types of facilitators, have access to these particular devices through which they're able to rationalize that giving of that advice, it actually doesn't cause any particular harm because the victim is very it's very elusive. So the victim is, of course, the fiscal health of the state and the public coffers and so on. But I have had experience in my previous research to actually interview a convicted tax advisor who was using specifically those devices to frame that actually, there was nothing wrong with that particular behavior, who suffered and who was the victim. And this is the kind of lack of immediate perception of a victim or harm is a potential enabling factor that I could highlight. The second point I wanted to raise here is another sort of proximate and maybe slightly more remote cause is actually the legal structure or the legal regime that exists in the tax law or in the tax area. We talked about this in the previous panel, but if I can just frame this in the kind of thinking more about why this is a contributing factor for the role of facilitators, is that a lot of the law in the tax law area is a bright line law or strict rules law that have been found in the literature to be very conducive to creative compliance. So complying with the black letter of the law, but not complying with the spirit of the law. And so therefore in the literature, there is this discussion between, regulatory drafting or legislative drafting. And perhaps there is a need to move away a bit from strict rules and instilling more principles or principle types of rules that actually there is some commentary in the scholarship potentially can responsibilize individuals more so, because then they need to think about broader standards. For example, acting responsibly or with due diligence when providing tax advice, or acting with honesty, and so on. So that is the second point I wanted to make. And the third one is thinking about potentially a welcome trend that exists, at least in the UK, that has started in the UK, and that directly tackles the ethics or culture of the of different professions that are involved in providing tax advice. And that is the development of enforcement mechanisms, such as failure to prevent offenses. So there are specific offenses in the UK called failure to prevent tax evasion, which directly impose responsibilities on corporations that employ such facilitators to put in place systems and controls to prevent the company to be involved in the facilitation of tax evasion. So my point here is that potentially we're seeing here a movement towards responsibilization or instilling ethical cultures within corporations that might, in a kind of indirect way, impact the behavior of individuals as well. That perhaps now maybe the values within corporations or the general corporate culture is shifting more towards instilling values of preventing tax evasion rather than providing advice that leads to tax evasion or tax avoidance even. So those are the three comments I wanted to make to start off, and I'm happy to revisit the flaws in the arguments that I put forward and criticize my my own arguments. Thank you.
Fantastic. Thank you very much, Aleksandra. And yes, really significant sort of food for thought there in terms of issues around the sort of values and the drivers towards different kinds of behaviour. And I'm sure we'll certainly want to pick up some of that in more detail as we progress. I'm going to hand over to Daniel now for your initial thoughts and observations.
Thank you, Andrew. Thank you for inviting me. I want to turn to the familiar fraud triangle as to why we get fraud in terms of motive, opportunity, and rationality, rationalizations. In particular, I want to focus on rationalizations that facilitate people of otherwise good conscience to engage in what I would deem unethical conduct. One of the rationalizations, I'm going to focus on three rationalizations. The first has to do with improper framing of political obligation. You go back to Socrates, and he drank the hemlock out of because he was a man of honor. And the honor, in particular, the virtue he was following, was the duty to obey law. And of course, tax, as well as other forms of regulation, are areas of law. And as Socrates pointed out, we can consent through participation in society. We should show gratitude for what we get from society and from government. We have a reciprocal obligation of fairness to our fellow citizens who are paying their fair share of taxes. And if nobody paid their taxes, society would fail. And of course, political philosophers have been arguing whether any one of those three bases justify an ethical obligation to obey law for millennia now, and there's not widespread agreement. But as a pragmatic matter, you take those four reasons together, and most people would think we would have a political obligation to obey law. But yet somehow people miss that. They don't think about tax evasion or tax avoidance as either one with reference to political obligation. That's true of principles as well as the facilitators we're talking about. I happen to be a lawyer, so one of the things that I would focus on is the obligation to a lawyer. You go to the American Bar Association's Roles of Professional Obligation, and they draw a distinction between two obligations that the lawyer has, or two roles they play. One is as the advocate, and one of our prior speakers today took it for granted that lawyers are advocates. Yes, we are advocates. Once we have litigation, we have to defend our client and make every possible argument that doesn't suborn perjury or is an outright fraud, even if we think the argument is not going to win. But that's because there's an advocate on the other side making similarly client-oriented arguments, and hopefully a neutral observer in the middle, an ideal judge and jury system that figure out who has the best system. And in that role, and that role, and playing the role of an advocate is fine. But what the rules of professional obligation also point out is lawyers are not always advocates. Sometimes they're advisors. And when you're taking an initial tax position, there's a possibility of taking that initial tax position not as an extreme position for the client's interest, but rather as if you were that ideal judge and jury trying to figure out what the law is actually trying to say. And of course, there's always going to be imperfections in the law. That goes all the way back to Aristotle and Aristotelian decency, talking about the decent, virtuous citizen doesn't exploit legal loopholes. John Rawls says the same thing, and even M. Smith says the same thing. So with regard to obligations to obey law, and it's somehow missed. The whole thing is missed, and then the lawyer gets to play this moral agnostic by claiming I'm just arguing what the client wants. When the truth of the matter is that's only true in an adversarial system, and not everything lawyers do is advocating. The final point I'd like to make in terms of easy rationalizations is to sort of miss what law means when you have a duty to obey law. And I think a lot of the problem goes back to Oliver Wendell Holmes' definition, The Path to the Law, in the early 20th century, in which he said, in which he's given a commencement address to lawyers and said what your client wants to know is what's going to happen to them if they take alternative actions. So as a lawyer's job is to read the tea leaves, draw on experience, figure out what the consequences are, and the prediction of what the courts are going to do is indeed the law. The problem with that definition of law, which is widely accepted and acted upon, is it's overly permissive. It's overly positivistic. It misses the Lon Fuller heart debate over is there a moral proposition that underlies law, and to the extent that you're over in a purely positivistic what can I get away with area, then taking advantage of every loophole under enforced law, conflict, gap, and so forth, ultimately is your definition of law. And what we need to do is to have additional reflection. If we're looking at causes, of course, there's lots of causes in terms of opportunity, and maybe we can get rid of some of the opportunity and make the motives different in terms of the financial rewards. But some of it also is people are capable of self-restraint, but they're only going to engage in that self-restraint if they properly frame the moral issue and recognize it's some sort of a duty to society. And if that sounds like pie in the sky, perhaps it is pie in the sky, but it is part of the component of what's going on here, is that it is a lack of moral self-restraint and proper ethical framing that's leading to the tragedy, not only in tax evasion, but in evasion of regulatory law in general.
Thank you, Daniel. That's fantastic. And some common themes coming through there already that I'll be really interested to pick up on. And I like that sort of framing of the lawyer's role morality, but the way in which that's been presented is really taking an emphasis on one of many potential roles that lawyers can play. But role morality is often framed very narrowly around that adversarial advocate role that you've just outlined. Fantastic. Kelly, over to you.
Thank you. I want to build off of our last speaker, and I like that he talked about the fraud triangle, because a lot of my work lies in using that framework to not understand, mainly understand the rationalization aspect. So we have a similar interest, and a lot of my work has been based around going and talking to white-collar felons, whistleblowers, and victims of fraud, and really understanding how each of those parties rationalize. And a lot of my work has been very self-reflective for me, but also self-reflective for the whistleblower and for the white-collar felon. And what I've learned that I'd love to share is thinking about how fraud happens and how all of us can be susceptible to fraud. And when I'm in audiences, when we go back face to face, one of the first questions I like to always ask people is, are you ethical? And everyone raises their hand because it's something that we innately think that we are, and yet still we speed or we use office time to engage in personal activities, but yet we feel like we are ethical. So as I've listened to today's panel and talk and listen to the speakers, my research is takes a different type of practical approach on how this actually happens. Not really so much talking about the theoretical underpinnings of fraud and the legalities of fraud, but how it's so easy for all of us to engage in it, or for all of us to turn a blind eye to it. And so I've spent the past 15 years going around, again, going into prisons, talking to white collar felons, whistleblowers, and victims of fraud. And I made a documentary called All the Queen's Horses. If you have Amazon Prime, it lives on there, and it's about the largest municipal fraud in US history that was committed by Rita Cronwell. And what she did is she embezzled over $53 million over 20 years. And what's so fascinating about this story is not so much that she engaged in the fraud. It was a very simple embezzlement scheme, but it was the rationalization of her idea of looking at the environment, noticing the internal control weaknesses, and being able to exploit them. We know that what happened in this small town of 16,000 people is they used trust as an internal control. And we know that that's never something we want to do. But no one paid attention for 20 years and allowed this person to take $53 million from a town that has an annual budget between $6 and $8 million, population of 16,000 people. So I think what I love to understand is really thinking about not only the rationalization of someone's ability to commit the crime, but our ability to turn a blind eye to it, not noticing the red flags. How does somebody make an annual salary of $80,000 a year and yet own 400 horses, and we turn a blind eye to that? These things aren't matching. So I love the fraud triangle as a theoretical foundation, but my life's work has really been trying to understand the rationalization of how we engage in it and how we turn a blind eye to it. So just wanted to leave those remarks. My friends think I'm just naturally nosy because I like to talk to people about their lives, but there's so much to unpack when you really look into a case and you get beyond just the technicality of the scheme, and you really start thinking about the behaviors and the decisions, and again, the blind eye to the red flags. So I'll pass it on to the next speaker.
Well, that's I think that draws a neat conclusion to those introductory remarks, and I think I'll sort of follow up really with a sort of question around the drivers. And I think you both, all three of you have raised these sort of questions around the drivers. And I wonder, drawing on your research experiences and your work in the field, whether each of you could perhaps reflect on whether you've been able to identify what those perhaps primary drivers are, what the relationship is between the individual and perhaps that organizational or national context, or is it the subject matter here? And is there something distinctive to taxation that we're talking about here, rather than other areas of unethical behavior in professional services? So Kelly first, and then Aleksandra and Daniel.
One commonality in the research I've done is one of the key drivers is access. And I think it's so pervasive because we all have some level of access, whether it's to your lowest level employee, which could be a contractor, to your most senior executive person within an organization. We all have a level of access that we can exploit. And so I find that tends to be the commonality, because the rationalization can vary. The fraud scheme, the actual scheme, seems to be pretty standard. But it's the access for me seems to be the key driver in all of the cases. We all have some level of it. How we exploit it or not tends to be the variability, but access would be the key driver that I've seen.
Okay, Daniel, Aleksandra, you were both sort of touching on these elements as well. Aleksandra.
Yes, I think that the point that you raised, Andrew, is quite important. So what is the relationship between individual level agency and then the organizational context? I think also from some sort of my previous also research with directly with white collar offenders as well. I think the setting is key and the cultural context is key when particular offenses are undertaken to promote also corporate goals or the value of the corporation as well. So I think that if we talk about organizational types of offenses in which, for example, particular institutions are involved in facilitating tax evasion, there was a comment raised here in the chat as well that refers to financial institutions. So we mentioned UBS, HSBC as well as a major universal bank was also involved in a significant tax evasion scandal. It's indistinguishable here, individual culpability from the organizational context. And there is a lot of thinking here that, there is a significant socialization going on into the cultural norms and cultural values that then individuals are submerged into. My view is that crooked corporations attract crooked individuals more so. I think that there is some kind of assortative mating going on there as well. But I think the relationship between individual and organizational factors is key and important to disentangle in this context. This is why I mentioned the failure to prevent corporate offenses, which establish corporate criminal liability, but at the same time, they should be incentivizing managers or directors within the company to put in place preventative mechanisms. And so I think that again, referring to the question also in the chat that also was put to this point, whether this financial institution involved in tax evasion then is the victim or the enabler. If the tax evasion was committed to facilitate its benefits, which would be commissions and fees by clients and so on, then of course they're enablers. And here the organizational context is indistinguishable from individual agency. So yeah, that will be just my reflection here.
Thank you. Daniel.
Yeah, I could speak to the organizational context, but what I'd really rather answer a different portion of your question, Andrew, and that is I tend to focus on the subject matter of the particular regulation in question, and I see a hierarchy of moral saliency, I refer to it as, in various types of regulations, and that somehow tax has a relatively low moral saliency as compared to, say, something like a health and safety regulation. So if you have a business person that's considering taking advantage of a legal loophole that would expose their workplace to highly risky matters of life and limb, I think taking advantage of that legal loophole might give them moral pause. But when they have a legal loophole in a tax, there's no pause whatsoever. They're just playing Monopoly and they're trying to win a game because you have remote victims. One of the speakers in the prior panel mentioned the fact that somebody had made an argument, actually, I think in a court of law as well as a rationalization, that there really is no harm to tax evasion because there's not really a victim, and I think that needs to be rethought in terms of in a reasonably just society with a democratic system. If you have too much money floating around in the system, you're going to wind up with inflation, and you need to extract some of that excess capital, as we may soon discover in this country. If you do all the spending and you don't do any of the taxing, you're likely to get some inflation. And as our buddy Richard Murphy says, you don't really need to tax to spend. You spend first, but then you eventually do have to tax to be able to remove some of the money. But there is a moral obligation not just to obey law, but also a good justification for taxation. The other point that I'd kind of like to make, just while I have a moment, is I think there's also something unique about tax with regard to the way it's interpreted, that it is more literal than other areas of the law. So that if you are arguing, if you walk into, you make a loophole style argument, and you try to follow a literal letter of the law in front of an administrative law judge, and that administrative law judge is in the area of an environmental regulation, they may very well go to purpose and spirit and close the loophole on you. Whereas if that administrative law judge is enacting some kind of a tax provision, they're more likely to go with the literal. And in fact, I think a lot of people that are trained in accounting accountancy think that all law is literal, but when you're a lawyer, you realize not all law. There's plenty of standards and equity in other areas of law. It just doesn't seem like it's enacted much in tax, and it's particularly ironic because tax has all these general anti-avoidance rules in it. It has form through substance, economic substance doctrine, and sham transaction doctrines, and some of them are. Recently, the IRS enacted one of them, and I think the economic purpose doctrine into the code. But it was developed by the courts, and in other countries, they're obviously written into their codes. So people are picking and choosing as to which rules they're going to follow, and there are standards that are actually written into the code. Nonetheless, there is a widespread tradition, not just in the U.S. but across the globe, that when it comes to tax, literal arguments carry stronger weight than they do in other in law, kind of perverting the system. So that would be something that would be more for the third panel. How do we solve this? Right now, I'm just talking about. I think that if we're talking about causes is rationalizations, and to me, and part of the causes of the rationalization is the ability to claim that there are really no victims, and that it's perfectly okay to take advantage of literal interpretations of the law, even if that clearly violates the underlying purpose of the law in general.
That's really interesting. So I guess what we're sort of presenting is a peculiar tension there between the sort of questionable moral salience of sort of taxation as an area in terms of the hierarchies that people might present, and on the other hand, this very much a kind of, very positivist, very black letter framing of literal interpretations, that kind of tension that I think Aleksandra was kind of presenting in terms of whether you're viewing legal interpretation or indeed ethical conduct between very hard and fast rules and more principles and more values based. So, I mean, Kelly, your background in sort of forensic accountancy, is this something that you recognise from your disciplinary background in the way that Aleksandra and Daniel have been presenting in terms of these interpretations that accountants are having to operate within as well, within the sort of taxation framework?
I think what's interesting when you think about the way accounting operates is there is a level of subjectivity that's in the accounting discipline that I think we don't always take into consideration. So when you start talking about the legality of or following rules, I think it's easy to say, does this break the law or does it not? But when you start talking about accounting, especially the auditing profession, there's a level of subjectivity that's inherently built into the decision-making process. When you think about what guides most accountants or auditors' decisions, in the US, it's generally accepted accounting principles. So by name alone, it is subjective in nature, generally accepted accounting principles. So we really don't have a law that sort of gives us a line in the sand of, is this right or wrong? And I think when you start looking at some of the larger fraud and scandal cases, there's this level of subjectivity that allows people to sort of push the envelope a little bit because, well, maybe I can make the case for this decision because it's so subjective. So I think that ethics becomes such an important role in the training of an accountant because of the level of subjectivity that's inherently built in the process. And I don't think we talk about that enough because there is no, I mean, there's the accounting equation, assets equals liabilities plus stockholders' equity. But when you go beyond that, that's about the only steadfast rule that we really follow. Everything else is what's the acceptable practice, and acceptable by whom, depending on what industry you're in, what country you're in, that can vary.
So I guess, and that sort of comes to the core, in a sense, of where those ethical obligations and where that ethical standpoint sits when you're trying to draw that line in the sand, when it's not clear whether that's operating within accepted accountancy standards or legal frameworks. And lawyers and accountants and indeed other professionals, there's a variety of obligations that they will have, whether that's to an employer, the client, the state, wider society. So could I ask the panel, what are your thoughts on the practical challenges for professionals operating in this space to draw an effective balance between those, I guess, competing interests and different ethical obligations that they'll have to various stakeholders? And do you feel that they have the intellectual, the ethical tools, the regulatory framework to help them strike that balance?
I would like to address your question, Andrew, but I'd also like to just respond to Kelly's previous comment, because I was struck by the fact that as a professional accountant, she sees law as or the way I understood her, and I may be misunderstood, as presenting law as kind of a bright line, whereas she's pointing out that in accounting there's a lot of subjectivity, and I would say that I'm not trained. I have an MBA degree, so I took 2 courses in accounting, but that's a sum total of accounting I know. And I'm not an accountant at all. But as a layperson, I think of accounting as having bright lines. And I recognize that law has no bright lines. You can argue anything. So there's absolutely no bright lines over here in the law. But it's sort of interesting that we have the just sort of almost 180-degree different perspectives and prejudices towards alternative disciplines. But I think it's also important to reflect upon, and I think living in a postmodern world, there's no bright lines anywhere. So I would say that probably both fields are. I'm interested in Kelly's response to that, if you want to say.
But so I'm an accountant, an accounting professor, not a trained lawyer. Never had. Well, I had a business law class years ago. But when I think about the law, I think about it as a speed limit. The speed limit is posted as 65. If you go over it, you're speeding. If you go under it, well, maybe you're going too slow, but even sometimes there's minimum. So there is an established stake in the ground as to what you should do, should you go left or right. But I think with generally accepted accounting principles, just in name alone, there is different voices around the campfire. Some people are saying this, some people are saying that. Which one can you justify? What do you have the evidence to say more of this one or that one? So it's interesting that you say that, because from a layperson's perspective, I look at the law as laying a stake in the sand as to which way you should go. And I don't see accounting that way. I don't see the auditing profession that way. I see the aspect of accounting that financial statements have to equal. That part of accounting is sort of an exact science, but there's a huge environment that's not. So it's interesting that you say that, because I'm not a lawyer, but I look at it as, if accounting was operationalized like the law would be, there would be distinct rules that you follow or that you broke, and it would be easy to decide. But when you look at the fraudulent cases and scandals, there's so much subjectivity as to how a rule was interpreted. And that sort of leads to the big problem.
Yeah, and I will move on from this and let Aleksandra speak as well, but I will also point out that within the common law, the most common word in the common law is the word reasonable. So lawyers love the word reasonable, and the word reasonable is about as flexible as you can possibly get. So we have a lot of subjectivity. But to go back to Andrew's point about the organizational structure and how do you deal with the perhaps competing demands that are placed upon you within an organizational structure to, for example, to meet shareholders' desires in comparison to obligations to society. To me, this is just one person's opinion, but I think it's a matter of keeping perspective is that the unexamined life is not worth living, and that ethics has to be the first concern. And the whole corporate social responsibility pyramid that Archie Carroll came up with is upside down. It should be ethics first, and then economics. Laws sort of peripheral. But so long as you keep the notion that that a corporate a shareholder doesn't have the moral authority to authorize executives or anyone else to engage in unethical activities, then you have to start by saying, as Avionen said in this area, just say no when you're asked to put together an illegal or a questionable tax shelter. But
yeah, Aleksandra, in your empirical work, how easy did you find the people that you were interviewing? How easy was it for them to just say no and balance some of those competing obligations?
It's a good question. I'm just trying to think, and also to refer to your point about the competing identities of professionals in terms of the ethics of their profession. If there is such a if we can talk about professional ethics of a whole industry, if there is such a thing in their established standards and what those are, and of course the competing goals of your employer, who might have different pressures and demands on you, and any other industry requirements that might be upon that individual. So I was just thinking about individuals in financial institutions and talking about managers and boards there. Individuals in financial institutions are already upon a significant contingent of regulatory obligations, and those are both hard law, and there are certain ethical standards that have been developed in general for good corporate governance in financial institutions that, again, as we established, often come up as facilitators of tax evasion, and now there are additional state-imposed requirements and so on. But I just wonder whether these competing requirements are as clear all of the time. So how spelled out are those? And if you have, if you belong to, let's say, you generally work in finance, how do you define yourself? Do you define yourself as providing tax advice, or you define yourself as working in a bank and then participating in actually tax evasion schemes and so on? What is the ethical role there, and what are the ethical standards? Where would they come from? Would that be from the financial regulator, which is unlikely because this is not one of their priorities? Is it from the tax authorities that you probably don't really deal with immediately most of the time, and you think about the financial regulator? So I think that because of the complicated people that are involved in providing tax-related advice, it is not so easy to always differentiate between these are lawyers and accountants, and I think that this is one of the issues. And referring to your question about how difficult it is to individuals to say no, that's a good point. I think speaking with some individuals who actually were involved in some practices that were kind of industry-wide, they were just perhaps condoned in times when there is a bit more lax regulatory regime. And it doesn't mean that there were actual pressures. It was something that everybody else was doing. So I'm not always sure that you're put in a position, unless you do this, you're losing your job. I'm not convinced in that argument, and I think that is why it's sometimes difficult to see at what point you're pressurized into behaving unethically, rather than accepting it as a standard industry practice that is not addressed otherwise.
Fantastic, thank you for that. And just to make people aware, Kelly's had to leave us, unfortunately, for a prior commitment at 6 o'clock. But thank you very much, Kelly. And we can sort of pass it on, or thanks to Kelly for some really interesting insights. I really like that idea of law and accountancy sort of talking across purposes and having this sort of misunderstanding or misperceptions of the different professions. I'm going to open up to I'm going to review the sort of questions down in the chat in a moment, but I just wanted to ask a quick question to both of you, Daniel and Aleksandra. Really sort of following up from part of the discussion in the last panel, in terms of the status of whistleblowing, and whether you feel kind of whistleblowers are perhaps, potentially sort of part of the solution here, or are they kind of emblematic of, perhaps some of the challenges that are faced by professionals in this particular sector?
Well, I was taken by Mary's comment that a big part of it, a big part of the solution is to empower whistleblowers. And the other gentleman, I think it was Charles, that made the comment that he was a whistleblower and that they're odd people. And both of those points stuck with me. And I think they're very good points. The only caution I would give to, and so I do think there could be a big part of the solution is to empower and to reward and to encourage and to enshrine, whatever the right word is, to encourage additional whistleblowing. Whistleblowing, of course, is always a double-edged sword, because sometimes the whistleblower is not right, and sometimes the whistleblower is a malcontent that's just claiming the mantle of whistleblowing so as they can protect themselves in some kind of a discharge proceeding. So that's part of the reason why whistleblowing law is convoluted, is because it has to be nuanced to be able to sort out which whistleblowers have the facts wrong and which whistleblowers are actually heroes. I do note that, as we all know, that whistleblowers typically do not fare well emotionally. They're likely to wind up with ulcers and failed marriages and bad health and blackballed in the community. So it takes a degree of courage to be a legitimate whistleblower, and I certainly would champion them. But I think it would be a marvelous idea that part of the way that the prosecutors, Josh and others, actually get the information, they got to have a whistleblower. So I think it calls for self-sacrifice. I teach a course in business ethics to MBA students, and I long ago decided to not encourage them to be whistleblowers, to tell them it's completely up to you, but to point out that those people that do engage in whistleblowing almost to a person will say, I'll do it again, even though that was a matter of self-sacrifice. Those are my thoughts.
Really interesting. Aleksandra.
I'm also going to reflect on Daniel's point about the issue of motivation of whistleblowers is a huge topic, also for kind of researching to what extent they can actually be used as actors in a regulatory regime. But I'm not entirely convinced that it matters. So say if a whistleblower actually reports on their employer or ex-employer, probably because of revenge, does that matter for regulatory purposes? Do we care about that, or do we care about the information and quality of the information? And I think that kind of thinking perhaps has led to dismissing some famous whistleblowers. So for example, in the context of financial scandals, the whistleblower on Madoff's Ponzi scheme was dismissed by the SEC because they thought that Mr. Markopoulos was a competitor. So he actually didn't have the right information. So I think that is one of the issues. The other thing is, I also agree with the previous panel's comments that whistleblowers have also been historically underprotected. Again, referring to HSBC, tax evasion scandal, the whistleblower, Hervé Falciani, I hope I'm pronouncing his name correctly, actually was pursued by Swiss authorities for a criminal offense against banking secrecy. Those were later dropped, but I mean, there is a pressure that is happening against whistleblowers. But I think they're a valuable instrument, and perhaps, at least in the UK, I think that we're lagging a bit in terms of using whistleblowers or providing incentives for whistleblowers in comparison to the US. And I just wanted to give you I just looked it up now, the latest number. Last year, HMRC, which is the UK tax authorities, paid £473,000 for whistleblowers that came forward to report tax evasion, which was an increase from previous years, meaning more people were coming forward. But in comparison to the US, this is a minuscule amount. And perhaps, providing more rewards might be the way to go in the UK as well. So importing a bit more from the US model with some caveats, I would say, perhaps. So not uncritically, but I think there is a need to reward whistleblowers, protect them better in general.
Fantastic, and that's perhaps something for the next panel to pick up. I'm just scrolling up and down the chat, and there's a couple of questions, but there's a question from, and I hope I get the pronunciation correct, Forhad Naja, who is asking really about when we're asking professionals to engage in ethical decision making, it requires a certain level of ability perhaps to engage in a certain approach to thinking. thinking through all of the potential consequences the question asks that the decision might have on everybody involved, notwithstanding the legal framework. And I guess a sort of question to both of you really is the extent to which you think the professionals operating in this space have the toolkit, have the resources to undertake and engage in that kind of thinking. And if they don't, what might be some of the supports that they could draw on, whether that be in terms of education or in terms of organizational environment or regulation. I don't know, Aleksandra or Daniel, sorry.
I was just going to invite Aleksandra to go first, but I could speak to it also. You're sort of asking where does ethics come from, and that's a pretty tough question. I have an opinion. A large portion of it is moments of quiet reflection. So it's a matter of calming down and detaching a bit and reflecting upon your intuitions as to what's the right thing to do. And then once you do that, go to trusted mentors, whether that's family or clergy or friends or other professionals, and try to bounce ideas back and forth, and then ultimately come up with something that you think is the best that you can come up with. Always being careful to gather all the facts and to frame it in a variety of ways. But it's tough to say exactly where ethics comes from. But I think more importantly is that you do engage in that reflection. You do engage in understanding that ethics is what it means to be human, and just because you can make money doesn't mean you should. If you've got to make money in an ethical way, otherwise it's an indefensible in the long run. But to try to get that perspective and then exactly how do you resolve it, I'm suspect that most people have the tools already. Like I said, I teach a course in business ethics, and it's more just having people have conversation, discover what they already think, that they already have ideas, they just haven't thought about them long enough. And if they think about them and they have the conversation, that ultimately they discover that they know a lot more about justice and fairness and treating other peoples with a degree of benevolence than they knew they knew. But that's my take on it.
Thanks, Daniel. Aleksandra, what are your thoughts? Do the professionals have the tools, or the more that we can do to create the space for them to engage in the sorts of reflection that Daniel's talking about there?
I would also agree it's a very difficult question to figure out where does ethics come from. I mean, there has to be something that comes from early socialization, and there's been a lot of criminological research about, again, early socialization and then becoming a deviant and so on. So there are many stakeholders that are implicated. The point is like, what is the ethics that we're talking about? So ethical behavior would be obeying the law, ethical behavior towards your employer, and I think that again, that kind of conflict and contrast and tensions might be important. So I suppose if we talk about ethics in terms of obeying the law and thinking of justice, as Daniel mentioned, I'm also convinced that there are a lot of business ethics courses that professionals can attend, and there is I mean, at least talking about financial institutions, and my impression is a lot of training going on as well about compliance and different regulatory requirements and so on. So I feel that there are the resources in place, but I feel that kind of that intangible transmission of moral values by superiors, that is something that it's up to the managers, and then the ways in which they can convey that to their subordinates. And here I'm talking more about which I didn't pick up on earlier, the role of middle manager. We can talk about the board. Boards usually do transmit ethical messages and the importance of compliance and so on. But importantly, in that hierarchy is the role of middle managers and how they actually convey that to the kind of cold-faced employees that might be employed in misconduct. Yes, I'm not entirely sure whether actually providing more training in this area would that would be the answer, rather than I suppose kind of more general thinking about corporate values in general, and what a corporation stands for, how they perceive of their reputation, how they see themselves in the eyes of external stakeholders. That might be, I think, equally important than just relying on training resources.
Yes, absolutely. I'm very conscious of time, and it sort of feels as though we're sort of gathering things together to hand over to the next panel, because I think what you're both presenting and what Kelly's reflecting on as well is quite a complex picture between the individual's agency, any training, prior socialization, reflection that they might engage in, those corporate or organizational structures, but also some of the wider societal and political messages that might sit around taxation in particular, the sort of moral saliency point that Daniel has highlighted, and the idea of the elusive victim, Aleksandra, that you've articulated as well. I think one other aspect, perhaps, as people reflect on sort of recommendations and next steps, might be how we, perhaps sort of reflect on the point that Iona's sort of flagged in the chat, which I'll just leave hanging for people to reflect upon during the break, which is about the emotional aspect of what we're talking about here. There's the rationalization, there's the ethicality, there's the accepted practice within accountancy, or there's the need to operate within rule of law frameworks. But I think a really interesting question there about the affective domain and how individuals within organizations engage with that way of thinking, and whether that perhaps provides a point of purchase, at least when we're thinking about recommendations and next steps. So I'm going to draw us to an end there and hand over to Costantino to do the housekeeping bit and set things up for the next panel. I really enjoyed the discussion, some really interesting questions and comments coming through in the chat, and some really thoughtful and insightful perspectives from Daniel, Aleksandra, and Kelly as well. And Kelly's posted into the chat the link to some of the documentaries that she's been involved in producing. So certainly going to be heading in that direction later as well. So thank you all very much indeed. Really enjoyed it, and look forward to the discussions continuing, and of course the eventual outcomes of the overarching research project. Thank you very much, Costantino.
Thank you, Andrew. Thank you very much for the brilliant moderation. And thank you, Aleksandra, Dan, and Kelly for the fantastic and fascinating discussion. I'm going to pause now the recording so we can have the break.